The Form 5500 is an annual report that is filed with both the Internal Revenue Service and the Department of Labor. It has information that relates to the operation and compliance of a retirement plan, such as a 401k. If your company has a retirement plan, it will likely need to file this form every year. Typically, this is July 31st, but it can be different depending on the plan year. There is one extension that allows for 2 months and 15 days, which ends up being on October 15th. Generally, these retirement plans have a third-party administrator that is going to prepare this form as part of its responsibilities. However, as the plan sponsor, the company who created the retirement plan, it is ultimately your responsibility to understand, review, and approve this form prior to filing. Here are a few tips to help you review your 5500. Review all of the information regarding page 1 as it concerns your name, the name of the plan, the type of plan it is, and other important business information. You would likely check this on the first year of filing, and in subsequent years, you would just briefly review it to ensure it is still correct. On page 2, there are lots of numbers, and they are all related to participants. You will need to ask the preparer for their reports that they have used to generate these numbers. You can review the list to ensure that all the employees that should have been recorded are actually recorded. There is one very important number here on line 5. If the amount on this line exceeds 99, then you will need to request a proposal for audit services on your retirement plan. Review line 10A and 10B to determine which schedules you will need to review later in the return. The first schedule of the 5500 is the Schedule A. This schedule describes any company or person who benefited from commissions related to the operation of the plan. Typically in this section, you will see financial advisors, investment companies, and insurance companies. All of these people would have sent a tax document to you that shows their commission information. To review, you would need to ask for the forms in order to verify the amounts recorded. On page 3, you might see a breakdown of any annuities that are part of the plan. Typically, this is where insurance contracts are recorded, which is line 4, and pooled separate accounts, which is line 5. If there is an annuity with unallocated funds in a general account, you will see a schedule starting at 7B for the prior ending amount, and then all of the various activity, and then the ending amount will be on 7F. Line 7F should tie to the amount that's on line 4. You can pull your investment statement for the year and look at the annuity to determine if the proper amounts were recorded. In Schedule C, you're going to see a section that describes any company or persons who benefited from the fees related to the operation of the plan. Typically in this section, you're going to see third-party administrators, auditors, investment companies. All of these people would have sent a tax document that shows their fees. To review, you would need to ask for the forms in order to verify the amounts recorded. Special note, if the company providing the plan pays for the audit or the TPA fees, those fees are not going to show up here. Only the fees paid for by the plan will show up here. On Schedule D, you're going to find a list of all of the MTIA, CCTs, PSAs, and 10312 IEs that are involved with the plan. If the information is here, you will need to get your investment statement for the year and match up the items from that list to the items in this schedule. This form basically shows the value of each investment vehicle that is related to the items that are included here. When something goes wrong in the plan, you're going to find that you have a Schedule G. Any information included on this schedule needs to be reviewed with your third-party administrator and your lawyer so they can explain the transactions recorded. The information most likely reported on this form is going to include non-exempt transactions that you are going to be well aware of prior to the filing of this form. Make sure you understand all of the transactions listed. Schedule H and Schedule I actually show the same information, but the difference between these forms are determined by the size of the plan. What they do show is the activity of the plan and the balances remaining in your investments. Compare the balances and the activity listed on the Schedule H and I to the investment statement for the year. There should be no differences. Schedule MB and Schedule SB, in a defined benefit plan, you're going to have a valuation based on an actuarial report. Those balances and other operating aspects of the plan, number of participants, liabilities, contributions, and the assumptions used by the actuary are going to be reported in this schedule. This only pertains to defined benefit plans and will not be typical of a 401k-like retirement plan. The Schedule R is going to have information about distributions that were not cash, information about funding minimum amounts into a plan like an ESOP, and other information regarding defined benefit plans and ESOPs. Make sure to talk with your third-party administrator to understand any information presented in this form. It is unlikely to be used unless something significant happens. If you have followed all of the advice I've just given, you will have a much greater understanding of your retirement plan, the Form 5500, and have the confidence to complete reviews of the 5500 and all of its schedules.